Good morning, everybody. I'm Ed Parcaut here with Mike Kelly, and we're Real Estate Jerky Daily.
Every day, except for those other days we don't do it.
Daily to us is Monday through Friday.
Yeah.
Just in case you're questioning what is daily. Because Saturday and Sunday, forget it.
Oh, big breath. You've got a bunch of stuff here.
No, I don't.
Yeah.
I just got a bunch of long stuff.
You got a knob.
So what'd you do over the weekend? How was your St. Patty Day celebration?
I worked very, very hard at P. Wexford's on Saturday. Got done around quarter to 8.
Quarter midnight.
Yeah, got there at 11. Worked till about 8 o'clock, quarter to 8. Yesterday, got there about 11:30. Had a little bit of breakfast, lunch kind of thing, and
was it busy?
Worked till 5:45. Yeah, there's probably 200, maybe 300 people there when I left, and then it gets busier later at night.
Of course.
Beautiful weather yesterday. Then I went over to Twisted Pig, and they had about 400 or 500 people there.
Wow. In the parking lot? So
in the parking lot, yeah. And some people, they must have been truly Irish because they were blasted.
Well, it's the right of some people just to get pretty messed up.
Some old lady, older woman, blotto, baby, give me a kiss. I said, I'm not going to kiss you.
Even if you were younger,
I will pour you a beer, but I'm not kissing you.
Yeah, you have no beads on.
Yeah. She had 44 longs anyway.
All right, let's move on.
Let's go.
All right, so for this weekend, a Saturday, I spent all day qualifying and then re-qualifying a couple VAs because you have to really look at those because the DTI doesn't mean anything.
Yeah,
unless there's some credit stuff,
right?
And then some of them go refer, which means they have to be manual underwrite. And if you do a manual underwrite, you have to drop it to 50 debt to income ratio anyway. So you might as well drop it to 50 and see if you get non-refer. And that was the one that's closing this week.
Cool.
It was one of those. And then, but at the current one, I was like, and then now I'm like, okay, well, do you want to go to this max payment? It's amazing. $575 purchase price.
Yeah.
VA has a payment of like almost $4,500.
Okay.
That's
steep.
Yes.
Yeah.
For a $575,000 home. And that's not a bad interest rate. I mean, it's not great. It's just not bad.
Yeah, it's
just not what we're used to.
No,
it's double for some people.
Yeah.
Payment,
Exactly.
All right, let's get to the news today. We only had really the one news that came out today is the National Association of Housing Builders Housing Market Index.
Or as I like to say, NOB.
Well, yeah, okay, let's move on. And what it does is it looks at the current and future single-family new home sales, and the data is compiled from a survey of around 900 home builders. And the reading above 50 indicates a favorable outlook on home sales.
Yeah.
Below indicates a negative outlook. Well, it came in today on March's number for February came in at 51.
51.
So it's a little bit better than favorable output. It's above 50. Let's put it that way.
Yeah.
They're saying the buyer traffic rose rose, and that's what's helped. Current sales went up because of the high, rates were a little bit lower, so that helped out a lot. Rates have since kind of went back up a little bit.
They have a little bit, haven't they?
Yes, they have.
Yeah.
And so we're going to probably see and that's one of my things over here was talking about the spring housing market. Is it ready for Fed's deja vu? Meaning that we're going to, last year at this time, that's amazing. Oh, rates got worse.
Yeah.
And right now the 10-year is at a critical point. And it's, we're at like 4.3. What are we at today?
Between 3.8 and 4.25. Wow.
I know, but right now we're at 4.3321. So we're actually, it's all going to, the only way this is going to go down and rates go down is if we see unemployment rise. And that's what we need to see. Yeah. And that's the problem. I don't know if we're going to actually see that happen because they keep throwing out all these little jobs called part-time jobs and getting rid of all the full-time jobs. And then saying, look at the rates. Look at this. We have a lot of jobs out here. Just because you have to have 4 of them to make a living doesn't mean anything.
Right.
And that's the problem right now. But what are you going to do? Again, we've never been here before. Oh, yeah, we have in 1970.
We're on the 70s kick again.
No, it's the same thing. It's what I'm talking about. We had tight unemployment.
Yeah.
Right. We have high wages, inflation, and then we also had no inventory.
Yeah, exactly.
So that's where we're there again. The only difference this time is we came out of a pandemic and they spent a lot more. I mean, during the 70s, they spent too, and then they had the oil embargo and all the other fun stuff.
Right.
Yeah. So
correct.
All right. So the weekly inventory every Monday we try to, or Tuesday at least, what's going on for inventory as of last week, from March 8th to the 15th end of the week. So inventory rose from 500,579 to 507,160. The same time last year at that time, we were at 414,967. So according to them, we have more inventory than we did last year, which is true. However, our normal number, or what it was in 2015, I don't know if it's normal, was 982,639.
Right.
However, in 2010, we only had 306,000.
I don't remember 2010. I think I slept that year.
It was a Space Odyssey one.
Oh, that's where I was. I was in space with
According to that, it was a totally different world than what we had.
Yeah. That's crazy. You know what? In 2010,
yeah,
we were all still making fairly good amount of money.
Less agents. Everybody was doing short sales.
A lot fewer agents.
People were doing a lot of short sales and foreclosures and buying the stuff on the steps. So that wouldn't be counted in the inventory.
Something I should look at is how many licensed agents we have in California.
Well, don't worry. All the part-timers are going to be gone.
Yeah, I know.
Because they won't be able to.
Still a lot. No,
to support why they should pay them to do their house.
Yeah, and even though the number will be big, some are lenders, some are appraisers, some are
I would be counted at that
and still have their license.
Because I have my broker's license, even though I don't use it because that's what I needed for my mortgage company.
Exactly.
All right. So a lot of people are, always like, oh, rates should be lower than they are and all this other stuff. So they're more, if you look in the last year, the independent mortgage banks and the charter banks on the mortgage subsidiaries lost $2,109 on each loan they originated.
Wow.
In the fourth quarter of 2023.
That's a lot.
That loss is almost double than reported the loss of 1,015 per loan that was in the third quarter. So that's like double the cost in that last quarter. I don't know how you can stay in business by losing that much money. I just saw a thing that it was not Quicken, Guild lost $395 million in like the third or fourth quarter.
Yeah.
And the year prior in the same quarter they made that. So it's like, okay, well, how can you lose that much money and keep in business? So it would have been cheaper just to get out of business and save that money. I just don't get it. I just don't know how. Yeah. And maybe I don't understand how their numbers work. But anyway, so the biggest problem we're having is the cost to originate loans is costing a lot of money. So it actually, they earn about $10,400 per loan, but they're paying out $12,485 per loan in the fourth quarter.
That's a lot of money.
Yeah. Think about it. If you do thousands of those, how much that is that you're losing. And I don't know how long they can keep doing this is what I'm getting at. Oh, but I've gotten more market share.
But you can't absorb a deficit. The topsy-turvy world, all weekend you're seeing these.
Oh, before you get there. So one of the biggest things here is there's no refinances, right? So a lot of this stuff, so it's all purchase. So it's a lot, and tighter, and the purchases you're competing against a bunch of other people. If I run a hard pull, my people are getting phone calls and texts and all that stuff, hounding them to do stuff. So that's one of the biggest issues right there. Go ahead. What were you going to say?
No,
you want to talk about the commission thing?
Yeah.
Is that what you want to talk about?
It's bugging me.
Yeah. Well, no one's going to know what's going to happen for months.
Nobody
and
knows
years.
What's going on, but you have these glorifying articles that you see 6% commission is gone. Well, hell, I don't know the last time I charged 6%, except if it was mandated by the courts, an estate sale, a probate, or an attorney that gets you in a divorce decree to be the agent of the spouses and sets the commission at 6%. Commissions are completely negotiable. They always have been. NAR doesn't set commissions. I don't know why that ever came about in the courts, but I guess it's because it's a large group that you belong to, and for a very long time, usual and customary seemed to be 6%, but we didn't talk about it with each other. That's collusion. Anyway, it's frustrating, and there is no set fix for this or differentiation on how we do our business. It's a lot of hooey. It's selling some papers. Actually, it's not selling papers, but it's selling airtime. And guys, if you really want to know what's going on, call a real estate agent or call me, and I'll tell you I don't know.
Well,
but that's the truth. We don't know at this time.
Nobody knows how it's going to shake out.
Yeah.
What's going to do differently. It could be completely different than what everybody thinks is going to happen.
Yeah. The one thing we do know is NAR decided to settle for $418 million. And that's what we know.
Well, they did that because it was smart. I mean,
Yeah.
if you read the real articles, they said the reason that they settled is they knew if anybody was smart was telling them you need to settle because it's going to be a lot cheaper going forward when your model's been destroyed. Right. When they said you can't do this anymore, you can't have it on the MLS what the numbers are. So the question is, we have no idea where this is going to go. Nobody really does. The question really is, at what point is this? This is like the rent control.
Right.
We're putting rent control in California to protect the renters.
Did not protect the renters.
Then now it protects the landlord more than anybody else. If they do, now they can raise their rates every year to keep in current with it. So what's going on now? It's going to cost the buyer. That's really the problem. Is this didn't say everybody's like, oh, this is so much better for the buyers when they go out. No, it's not. They had never paid it.
Yeah.
And now the question is who's going to
pay. The
buy.
buyer didn't know who was paying the commission is absolutely ludicrous.
Oh, when
at
they
least
first
in the
get
state of California.
Well, when they first get into contract, they really don't. When they're talking to you and who pays they don't know who pays me. Well, I don't get paid by them. I get paid by one.
There's a very big possibility that some realtors did not explain that, but I'll tell you, in my world, it was always explained.
I understand
right off the bat.
I know, but I'm telling you, when you have a new buyer,
Yeah.
So the question is, at what point are they saying the buyer didn't know? The moment you talk to them, or the moment they were in contract, or during? Because everybody asks me, how do I get paid? I go, well, you don't pay me. It used to be years ago, I would charge you and then get some yield spread premium, but there is no yield spread premium anymore. It's completely gone.
Right.
Unless you're doing a reverse mortgage or a buyer, borrower pay kind of situation.
And a lot of times you're going over a contract before you submit the contract. You go over an estimated buyer settlement agreement or statement, and they're like, where's the commission to you? Well, the seller pays the commission to me through the listing agent, who charges the seller, a certain percentage. And traditionally I get 50% of that, or my brokerage gets 50% of that.
I think the difference going to be is they'll have to negotiate each time, but who knows how this is going to work out. I don't think it's going to be as crazy as everybody thinks it's going to be. I think it's going to work out fine. I mean, the same thing, it always works out the complete opposite of the way it was supposed to be intended in the first place.
And there's the conversation that it's no longer going to be published in the multiple listing service, which is the way it used to be. When I first started back in the Stone Ages, where we would hammer out a contract on a tablet, a stone tablet.
I understand.
And
not an iPad.
Not an iPad. They weren't invented yet. You would write in seller to pay, cooperating broker 3% minus $20, and the $20 was the stamp you had to pay for to put your property in the multiple listing service.
Yeah.
And then they just established, the multiple listing service said, why don't we just establish what the seller is going to pay, or what the cooperating broker is going to pay, offer in compensation. And then you knew it was published in MLS. You knew exactly how much you were getting paid.
Well, this is just going to be like the whole for sale by owner now.
Right.
So now you're going to be, okay, I want to be a for sale by owner. I don't want to pay anybody. Okay, well then go do your thing again. And the people who want their house, because if they're going to show houses that pay them to show the houses.
Right.
Because they're going to want to get paid. Because I saw an article, well, they're going to get paid by the hour. Well, that's okay. Let's go to the banks and look at the difference between the loan officers there today.
Mm-hmm.
And again, I'm making a complete across the board thing. They're going to be some amazing ones.
Yeah.
Right. But on average, because everybody, they have no idea what's going on. Yes, because they get paid per hour and they're not really a loan officer.
Right.
That's the difference.
There
are a couple
coordinator.
Yeah, because they always have to ask somebody else if they got the right stuff, and what they have no idea what's going on. But if you go to somebody like myself or some of the other people we know, they know everything that's going on.
Right.
Unless they potentially have a team and they don't touch your transaction because they just talk to everybody.
They're very gregarious.
Before I forget, there was an article about anything else you want to hash out here, or we just want to
Well, I mean, when you said for sale by owner, it always cracked me up. Yeah, I want to change. I want to save the 6%, and everybody's got this notion that it's 6%. It's completely negotiable. Yeah, save the 6%, but nationally, on average, a for sale by owner or a coming soon will leave 30 to 35% on the table. So you tell me the realtor's worth.
Well, here we're not saving 6% because there's still the seller side commission,
right?
Which is not going away,
right?
So there might be just the seller side 6%, and we're going to give you 3 of it, or whatever the number is. There's going to be a way around this, and you just haven't figured it out yet. Because it's still not going to go away. Because people, and my wife's like, well, they should just do a flat fee. Like, but if you don't have competition, it doesn't get competition to sell the stuff and put it out there. It doesn't work. You're going to get people who don't work hard, and then you're not going to get the top dollar. And you're not
there are groups out there that do flat fees,
right?
But that's it. They charge a flat fee if they represent the buyer and they represent the seller. But if they have to offer it on the MLS, then it becomes a commission based listing, and you're almost back at 6 or 5 or 6%. So thing is, you need the competition. You need many people walking through the property to be able to get the highest and best price. And people are saying, yeah, but you're inflating values of properties. No, you're not.
Who are these people? Do they own a home?
They're the attorneys. No, they're the smart the ones who have a math equation. They're smarter. By the way, I read a lot of that white paper that
I talked about last week.
Yeah. And that's interesting. They're saying, well, maybe we should just go to 1%. Okay.
Well, as long as it's over $1 million.
Yeah.
But but on the larger homes, you don't pay anywhere close to that. That's way to negotiate. It's a price point,
right
there. I haven't seen the last time they had made 60 grand. Anyway,
happens.
Yeah, I know, but not on always. It just depends on the situation and where it is, and if it's easy.
Bottom line,
yeah,
everything's negotiable.
I think the biggest thing we're going to see from this is part-timers are not going to be here as much because you can't sell. You're going to have a harder time selling your knowledge and everything else when you're a part-timer. That's the only thing I see more than anything else.
And other than family members and a very close personal friend, most people don't want to put their property on the market with a part-timer.
I know most people don't understand.
Yeah. And so you're not guaranteed a commission,
right?
In this pretend structure that's coming forward.
All right. So we'll keep you posted with what we don't know.
Exactly. I'll just make stuff up.
All right. So a couple last things before we get out of here. Senior equity out there. So anybody 62 years or older, there's roughly $12.84 trillion in equity in that group. That's a lot of money to help them with reverse mortgage or whatever else they want to do. The biggest, one of the largest costs, we talked about this many times for buyers, besides this new commission thing, is the insurance costs. The homeowner insurance,
right?
And did you know that Florida tops the highest average annual home insurance costs at $9,213 a year?
Yeah, that's crazy.
And we're complaining up in Tuolumne County of $3,500.
Right.
The average cost of insurance,
and that's a lot.
It's huge.
Yeah, it's huge.
It's even down here. Some of my new buyers are looking for insurance. I was like, oh, that's a lot more than it used to be. And come to find out, the average cost of insuring a $300,000 property, not that they had that, surged by 12%. So it would be the same. It went up 12% in 2023, reaching $1,770 per year. So it used to be on average, you could get a policy for less than $1,000.
Yeah, you have to blame the insurance commissioner and the pandemic and all that stuff. And they need to act on that. They need to make these. You're in the business to make money on also insure properties,
right?
But if you can't charge the appropriate amount of money to be able to do that because of the increased cost of everything, thank you, Biden. Insurance companies can't stay alive.
All right. One more.
Okay, let's do
Let me finish this.
Yeah.
All right. So in Texas, rates shot up 23% last year, 23.3%, while Arizona, Utah weren't far behind with a respective increase of 21.8% and 20.3%. I don't know if you've seen the things lately where Texas is getting pummeled by hail,
right,
and is breaking the windows and everything else. That's others, so you got car and damage from that. Florida still tops the highest, while Vermont has the lowest average cost at $914 due to limited risks exposure to natural disaster. So if you don't want any exposure to natural disaster, go live in Vermont.
The 10 ain't nothing happening there.
Right. The 10 least affordable states for home insurance based on the average annual premiums, of course, is Florida, Oklahoma, Texas, Kansas, Georgia, Nebraska. I didn't know about Nebraska, Massachusetts, New York, and Colorado. Did not hear California in there, because unless you're in a high fire area, your insurance isn't that bad. Other end of the spectrum, you have New Hampshire for the lowest. New Hampshire, Minnesota, Vermont, Maine, Connecticut, Utah, Illinois, Washington, West Virginia, and Ohio are the most affordable states. Again, you didn't hear California in there. All right, I'm going to get into one more thing and we're going to get out of here.
Yeah.
HUD is being sued over,
of course,
allegedly failing to refund mortgage insurance premiums. So if you have an FHA loan, you pay it off within the first 7 years, by they have to give you a refund of a certain amount. There's a trigger in there.
It's prorated, right?
But what you don't have to, but this one lady did a refinance and she paid it off. I think it was in 3 years or whatever. And she's owed $1,000. Well, come to find out, you actually have to fill out an application to get that money back.
Yeah.
And if you don't get the money back. How much is this? $385 million in refunds they owe. So that's more than 755,000 borrowers nationwide. And that's a lot of that's in the last 10 years.
So this lady, who should she have called? Should she have called HUD directly?
I don't know the process. That's not what I was getting into.
No, that brings up a question to me. Who should be the responsible one to tell her, oh, by the way, you have to fill out an application for your
I always thought they just automatically refunded it on the thing, and they guess they don't. And they were audited by their own inspector general, the HUD's office in 2022, and they were like, there's a lack of adequate procedures related to repayment of premiums. What should we do? I don't know. Give it to the current administration to spend.
Yeah, do that.
Yeah.
Give it to Ukraine.
So then just in Florida alone, there's $22 million needed to give them back.
Yeah.
And there's another 308. Yeah. So it's really a lot. All right. So this week we have Wednesday mortgage applications, Thursday jobless claims. And if the white paper that Mike was talking about, you can get it here. Talks about what the potential there could be for the future and what they're looking at. Take a picture of it and go check it out, and then tell us what you think. What was the comment?
That her insurance went from $900 a year to $1,700.
Yeah, it's because we're losing insurance carriers.
Yeah, exactly. Competition, no competition.
Lack of competition.
Right.
Yeah. So what are you going to do?
It's tough. Yes. It is a tough time. Remember, vote your pocketbook in November.
Always vote your pocketbook, no matter what. And Stanislaus County, we only had 19.9% come out in the.
Abysmal.
It's horrible. Yeah. So nobody should. If you're one of the 19.9, you complain is fine. If you're the other 79 point whatever, don't complain.
Yeah. Yeah, exactly.
I guess
you can't complain.
Well, you shouldn't. It's it's actually 80, isn't it? Wouldn't be 80.
Well,
something?
I think what we should do, this is going to be like a sitcom. So you're going to hear someone complain, and then you're going to say, "Did you vote in the primary?" And they say no. You just slap them.
Yeah, but you can't.
No, I can't.
It's protected. You can't ask what they voted.
I didn't say who you voted for.
I don't
did you vote?
It doesn't matter.
Did you vote?
That's why your name is taken off the ballot once they put it in. So it doesn't matter that once it's in, it could be illegal. But up until then, there's no signature.
I'm gonna slap him.
All right, you slap him. All right, make it a great day. Thanks for being here, and we'll talk to you tomorrow.
Bye, kids.
All right, bye. Oh, by the way, we're looking for a guest hosting from Wednesday, Thursday, and Friday while Mike's in Las Vegas. If you want a guest host with me for the morning show, reach out, and we'll get you on. All right, make it a great day.
Get flooded with calls.
Yeah,
because everybody wants to get rid of me.
No, everybody was like, I don't want to do it. I'd have to know what's going on. All right. Yeah, make it a great day. Thanks for being here. All right, bye.
Bye.
Talk to you tomorrow.